And we are live. My name is Zane Stevens. I am the founder of Protea Financial, and we're live. It is Friday the 13th. Gosh, a lot of superstition around this day. And this is sort of where this post today came from. I would like to ask you all the question: are your accounting records accurate? I'm sure your answer is going to be, of course they are. Of course they are. Why wouldn't they be? I do the work. I know what I'm doing. Yeah. Never made a mistake in your life before? Hmm. There's only really one way to make sure that your accounting records are right, and that's to reconcile them. So are you? Are you taking the time on a monthly, quarterly, or at least annually basis to reconcile your accounting records? I would hope so. The reconciliation of the accounting records is such an important task. There is no way to guarantee that your accounting records are accurate unless you are performing reconciliations. Now, there's a couple of key things that you should definitely be reconciling. I'm going to sort of put this on the inventory side because, we deal with wineries. So that's what we'll do. So we'll year a little bit of inventory. But for a general business, these are the things that everybody should be looking at. Number one, reconcile your sales on a monthly basis. Number two, reconcile your payroll on a monthly basis. Then make sure your balance sheet is reconciled. At a very minimum, you should be reconciling your bank account on a monthly basis. Everything else, you can probably get away with quarterly. I prefer to do it every single month, but quarterly will be fine. And again, obviously, at a bare minimum, let's do it once a year. But make sure your inventory, if you're selling inventory, make sure it reconciles. Double check your AR, AP, make sure that's all valid. Reconcile your fixed asset register, make sure everything has been listed on there and it matches up to your general ledger. If you've got any loans, make sure you have loan statements and make sure you can see that the balances match and the interest has been allocated correctly. Just reconcile every single balance. And reconciliation means taking your general ledger balance and making sure it matches an external third-party document. Make sure it is matching or at least reconciled, and we'll tell the difference soon, to some third party document. Make sure it is not something you created yourself, but rather a document that somebody says, this is the balance. So, bank account, easy, right? We get a bank statement. Inventory, maybe a little harder, but most of the time you're storing at warehouses, so you can get warehouse reports. If you're storing at your own warehouse, do inventory counts, right? Now that's a third party performing an account, which can be yourself, but it's at least independent from what you're processing on a monthly basis, and make sure those matches. Loans, you should get loan statements, interest schedules, amortization schedules, all that type of stuff. There is always an opportunity to get an external document, and reconciliation requires you to confirm a balance to a third party document. That's what a recon is. Making sure your numbers match something that is the source of truth. So getting sure they reconcile. Now there's the matching, which I said. So matching is identical, but when we're forming a reconciliation, does not necessarily mean that the amounts will be the same. Actually, in most cases, they'll be different. And when you go into Counting 101, you learn to reconcile a bank account, and that's a big portion of it, right? There's all these reconciling items. I wrote a check on the last day of the month, and I mailed it out. That person has not received that check yet, so it cannot show on my bank statement. That is a reconciling difference. We will identify it and mark that as a difference. But what's important when you're doing that recon is that at the end of the day, your difference is zero. Now, I'm not saying that there won't be any differences. My example just said I sent a check on the last day of the month. Nobody else has seen it. I've put it in the mail. Nobody else can know about it. But at the end, you still need a zero difference. So if in a bank account statement sort of situation, the bank says I have $10,000, I say I have $8,000. What's the difference? Well, that's $2,000 difference. We're still got a $2,000 difference. I then need to identify what makes up that $2,000 difference. Well, hey, I just put a deposit in right after close of bank on my last day. That was $4,000. What do you mean? We were under by 2,000, and now there's a deposit of 4,000. We've actually got a $6,000 payment difference. Okay, how many checks have we written? Oh, that check that I just mentioned to you. Well, that was for $6,000 to a vendor. Great. So we have a $4,000 deposit, a $6,000 check, and we have a net difference of $2,000. We're looking for $2,000 worth of differences, so our difference is 0. Amazing. We now have a reconciliation. Remember, if you're doing recons, your reconciliation differences need to equal 0. Don't tell me there's a difference, because then it's not reconciled. Then you know there's a difference, but you don't know what the difference is, and what's the point of that? That means your records are incorrect. They are not accurate, and they need to be fixed. So I'll ask you the question again. Are your accounting records accurate? If you're doing reconciliations and you're doing them correctly, your answer is yes. If not, maybe we should do a recon. Happy Friday, everyone.